Welcome back, guys, to Talking Sense. Last week, we covered how to build credit as a beginner, and this week, we're going to go into more depth. So we're going to talk about what to do to increase your score or to recover your score if you've made some poor decisions in your credit handling in the past. We know that debt is not something we'd love people to chase, but it does have an impact in your overall spending. So we want to make sure we're covering these because we felt like all of us have to use debt at some point, basically, in the United States at least. So I've brought Chad back for this episode to help me with this. Some of you may have a decent score and you're just looking to raise it further. For some, your score may have been damaged by some past choices, but we want to give you some tools either way to increase that score, help you understand it a little better so that you can have a successful future with your credit score and debt and things like that. So, Chad, we talked in the last episode about how all of us end up using some sort of debt in our lifetime. And you used the reference of a pocket knife. I'd like you to kind of share that analogy again, because I think for those that may not have caught it in the last episode, that's a great way to explain debt.
Yeah, so I utilize credit card for everything. We talked about in the last episode, and then pay it off, utilizing my checking account. So therefore, I'm not exposed to those transactions directly to my checking account, right? I'm utilizing the credit card to make those transactions just because obviously, information and not going through, we've all had that issue of a fraudulent charge to something, right?
Yes.
If you've been utilizing any kind of credit card or debit card or anything, electronic transactions, we've all probably been exposed to that fraudulent transaction. So I try to limit my exposure to my checking account by utilizing the credit card for the majority of my transactions. So if I'm going to carry the credit card, I treat it, and this is analogy that we've utilized a lot, is like a pocket knife. I can carry a pocket knife and utilize it for a lifetime as a tool. But there could be easily situations where that could become a weapon, right? Harmful to me, harmful to someone else. I could, if I leave it open, if I'm careless with it, I'm going to hurt myself, right? With a pocket knife. Now you think, well, it's just a pocket knife. But yeah, you can hurt yourself with a pocket knife. You can hurt
yourself pretty good.
Right? So it could be used as a tool or it could be harmful to me. The same with the credit card. I can utilize it as a tool to be efficient in my transactions, to make sure that I, those incidentals at a hotel, whatever it may be, that I've got to use a credit card for online transactions, but it can become harmful to me if I misuse it or use it in the wrong scenario.
When I think of things like student loans, used the right way for the proper purpose, they're great, they're useful. But for people I knew in college, and I'm sure it's the same now, they would get extra loans to cover things like a new car. Well, that's not what it's intended for. So, getting a mortgage to buy a home, that's what it's intended for. Getting a home equity loan to go on a vacation or pay for a wedding, that's not what it's intended for. So it's about using it for the right purpose. But we're going to be talking about how to raise that score, how to understand your score. First thing you've got to do is you've got to get a credit report to understand where you are. You've got to do an analysis. There are 3 different credit reporting agencies: TransUnion, Experian, and Equifax. Each of those are required to give you a free credit report once per year. So what I do is I spread it out. I do one every 4 months to look at it when I'm trying to track it carefully. But you can get that. It'll be a little bit different between them. There's always a little bit of variance, but it'll help you understand what your track record has been up to that point.
Yeah, and that's going to help you make sure that you've not overlooked something. We've all been asked at the counter in purchasing, whatever box store you've been at, right? Do you want to open up a card today to save 15%? And so there are a lot of people that take advantage of that 15% that one time, and then it goes by the wayside and we forget about it, and it becomes junk mail, and then, oh, by the way, I've got a balance.
Yes.
So we have seen that with some clients, and so you've got to make sure that there are none of those out there that maybe you just forgot about.
Or that were opened in your name without your approval. I've seen that where people have caught that before by looking at theirs. And for me, medical expenses are something that can sneak past me because you don't often get paper statements anymore. Everything's digital through their portal. Well, if you miss the email, you might not pay a bill. So you could get behind on that if you're not careful. So if you're trying to really monitor your credit, build your credit, first thing you've got to do is understand where you're at and make sure you're pulling that, make sure there's nothing fraudulent or in error. And then you can dispute things if you find error. So make sure you do that process. The next thing you can do is paying off your smaller balances. The number of cards you have with a balance does affect your card. So if you've got 10 different cards that all have a balance, that's going to affect you. So start paying off the smaller cards and getting those back to a zero balance will increase your score.
Right, because what is that credit card company doing when you open that account? They're asking you for your income, right? Your household, those type of things, those questions that you're asking, and then they're also gathering all the information that they can from you, from whatever transactions and whatever information is out there for them to gather about you. So based off of your income and all the information that they're gathering, they are going to give you that credit limit. And so if you have multiple credit limits out there based off of your income and all the other transactions that you've utilized that for, then it is going to affect the overall. If you've got 10 cards out there, that's different than having 4 cards out there.
Yes. And what we recommend people do is pick 2, at most, 1 or 2 that you're going to use. It'll help you not get where you have balances out there you've forgotten about. And it'll also help you really be accountable to that. It's okay to leave those other cards open if you want to. I personally would rather take the hit of closing it and being done so it can't be used fraudulently. But if you just pick a couple of those, I'd keep the one that you have the longest record on. Like we have a card that's through Disney from when I was planning a trip forever ago. I haven't closed it, but I don't use it. And so I want to have that long history. But I've gotten rid of basically all of the others except for the one that we use every month.
Yeah, so that brings to the next point. If you need to utilize it for more monthly expenses, because let's just face it, everything is more expensive, right? We're spending more at the grocery store, gas pumps, those type of things. So we are spending more on that credit card just because of monthly cost. So you may need to increase that limit on these 1 or 2 or 3 cards that you utilize month to month.
And it affects your utilization ratio. So the utilization ratio is how much of your total credit balance available to you are you using? Have you spent? And so if you can increase the limit a little bit on the couple of cards that you do have, you can end up having a lower utilization score, which will help you long term. But do make sure that your creditor's not going to do a credit score inquiry to do that increase, because if they do, every time someone checks your credit score, it affects yours. It makes it go down just a little bit. So, aim for a balance that is less than 30% of your available limit. Now, we're going to say pay it off every month. If you can't do it monthly, if you're struggling with your budget, pay it off every week.
Yeah, I think that's a big tip there is to not wait, not delay it. If you feel like you need to go in there and make weekly payments, I think that is good discipline, and it helps you stay on top of it instead of getting this daunting bill and saying that, being like, hey, I get to the end of the month and I just can't pay that total balance. But eating at it, each week, I think will help a lot along the way to make sure you're not accumulating that large balance that just seems like you can't pay it. And then you're like, oh, well, I'll just maybe get it next month, right?
Yeah. And I have mine set to send me a notification when it hits certain balances so that I can be aware of it, because otherwise it's not even top of mind for me. And you can make payments in the middle of the cycle because the statement balance is what gets reported as far as that utilization ratio. So if you did have to book a vacation, go in and pay it off before the bill hits so your utilization ratio stays low. The next thing, this is going to feel like a no-brainer to some, but it's a struggle for some. Pay your bills on time. 35% of your credit score is determined by that. A third of it is determined by whether you just pay your bill on time. So a solid history of timely payments is one of the best things you can do to keep that score higher. And remember, this isn't just your credit cards. There are some utility companies, health insurance providers, things like that do report to the credit unions or credit score providers. So you want to make sure that you're doing that consistently. Next one is don't close an account with a good payment history. I talked about this a moment ago. Just going to go over it quickly because we've got a lot of points to cover here. But even if you don't use it any longer, and I actually was dishonest, I have one thing that goes through it every month. I have one bill that goes through my my Disney card, and then I have it set to automatically pay it every month, the full balance. It's like $30 a month, but it's just so that I keep that credit history going. I don't even have the card on me. I wouldn't be able to produce it for you. I shredded it, I'm pretty sure. But it still exists because I thought I've got a lot of kids. We may go back to Disney. You get some discounts, but don't just get rid of it because that long history will hurt you. And when you close those accounts, especially if you're near wanting to make a big purchase, it does cause your score to dip just short term. So you want to be cautious of that.
Yeah, and so kind of like what we talked about earlier, each time you go to that box store and they ask you, do you want to save 15%? What is the long-term effect of that, right? Opening that card versus just utilizing the one that you already have, long-term may be less headache.
Well, and if you miss paying it even a single month and you're paying 30% interest plus a $35 fee for missing the payment, you've probably spent more than the 15% you were saving.
Oh, yeah. Easily.
All
but
right.
ultimately what we're trying to do with giving yourself some credit and trying to get with a larger credit score is saving on interest rates. I mean, that's what you're trying to do.
Yes.
Why would you want a higher credit score? Some people say, I don't need a credit score. Well, that's great. Utilize your savings, your assets. Absolutely. If you are that person, fantastic. We applaud. We encourage. That's where we want to be. But we realize that in this society, we have those that are out there needing to utilize credit cards and needing to utilize some credit in order to make some purchases and get to that next step where those that are paying for cash are getting to, right?
Yes.
So during these steps, what is it doing by raising your credit score? And it's really, when it comes down to it, is you are saving on interest. Yes.
And if you are shopping loans, another tip related to credit cards, if I am shopping for a car loan, for instance, because I learned, this is one of those things I learned later in life that I wish I had known, you can go to your bank or any bank and get a car loan. I didn't even know you could do that. I thought you had to do it at the dealer. So there's a tip in case you didn't know that. But when I learned this, I was looking at a minivan, shocker, I know, with my load of children. And I went to 3 or 4, but I did it all in the span of a few days. Because if you have 3 or 4 hits to your credit reporting, people seeking that score, but it's in a short period of time, it only counts as 1. So it doesn't affect your score like it will if you did it this week and then next week and then the following week, and it keeps it from really affecting that score. So if you're going to do it, make sure they're within 14 to 30 days so that they only count as 1 inquiry and don't really, ding the credit score. And then the last thing is you got to stay on top of it. You've got to monitor it. I know you went back and you checked and you looked at it and you saw where you're at, but you still need to go back in consistently and look at your score, not necessarily to be like, look at me and my score. Part of it may be to help you stay on track, but also to make sure there's not any fraudulent use of your information, make sure there's not any errors in the reporting that need to be dealt with, because it's a lot easier to do that than to wait until later. Another thing that I'll own, I did not stay on top of this, and after a few months I found something that I went, oh, that's weird, and had to deal with it. Pay attention to your statements. Even if they're digital, make sure you're going in and reading it. I bought about $500 worth of wigs. As you can see, I needed them, right? I wear a lot of, someone got a hold of one of my credit cards, and over the course of 5 months, the charges got a little more and a little more. The first one didn't really catch my attention. About the 3rd month is when I noticed, and I was like, what in the world is this? I've seen it now 3 times because my husband and I share, and we had just been super busy with kids' sports and weren't really connecting like we normally do on our budget. And finally, I Googled it, and it's wigs, ethnic wigs to be clear. So I was like, oh no. And by then it was like $500 worth, because that's what they do. They do a small charge to see if you notice. And then they tried a bigger charge, and then a bigger one, and a bigger one, and a bigger one. So, make sure that you're staying on top of your bill, looking for unfamiliar charges, so you don't, like me, have to go back to the credit card company and be like, I'm so sorry, but this card's been compromised for like 5 months. And then you have to check everything. Right.
And it may not be even from your credit card. It may be from a third party. My cell phone provider, I received an offer because they had a data breach, an offer for, identity protection. So it may not be that they are getting it through your credit card transactions.
Right.
Your information may be going through a third party that you pay a bill to, that they have a data breach. So it's not just about just the credit cards in which you use. It's every service that you are transacting, have transactions with. Electronically.
Yes. So every site that you put your card in and you say they get to save it, that is a potential breach opportunity for someone later on. So we would say it's probably better to not save your card information, do the transaction, but don't save the card information for later, it'll maybe make you think twice before using your card next time, but it'll also protect you long term. And make sure you have those complex passwords with two-factor authentication where possible, especially if you do a lot of online shopping. So it's time for our 2 cents. We are short on time today. We've run long. So what would you like to add?
Pay it on time, every time.
Yep.
That's the key.
And then make sure that you're only using a portion of your credit limit. We talked about that utilization score. So pay attention to when you're paying, how you're paying, so that you can really succeed and win the game of credit, because there is a way to win. Thank you guys so much for joining us on Talking Sense today. We appreciate you. We hope you've learned something in the last 2 episodes about credit and how to use it effectively for yourself. And catch us next week for more content. Thanks for listening to Talking Sense. And if you like what you hear, make sure and subscribe to the podcast to get all the newest episodes. The Jim Wealth team is available to you 24/7 at info@getreadyforthefuture.com or by calling our offices at 866-653-PLAN. That's 866-653-7526. And while we like to have fun here, we're also financial advisors, and that means disclosures. You should personally consult a financial advisor before making any investment, and no strategy can assure success. Securities offered through LPL Financial, member FINRA SIPC. Investment advice offered through Independent Advisor Alliance. Independent Advisor Alliance and Jim Wealth Financial Advisors are separate entities from LPL Financial.